Hello, fellow risk takers, and welcome to my worst investment ever. Stories of loss to keep you winning. Today, I want to talk to you about my chat with Suresh Mahadevan. I call it Seduced by Cricket. Let's give a little background on Suresh. He's CFO of SureCash, which is a Bangladeshi fintech firm. He was Group CFO of Digi Asia, the Indonesian fintech firm. He spent 12 years with UBS Bank as an equities executive in Hong Kong, India, and Singapore. Even though he looks so young in this picture, huh? He's been an angel investor for the past 4 years with at least 20 startups to his name. He's got an MBA, postgrad diploma, undergrad degree in electrical engineering. So what was his worst investment ever? Well, he ventured into angel investing after UBS banned staff from stock investing worldwide. That was after the 2008 crisis. Now, he was an angel investor in a startup that tried to harness India's other religion, cricket. And for my American viewers, cricket's not the animal, it's the sport. The company's fantasy cricket app was to be the first of its kind. He invested $100,000, was seduced by the fact that noted cricket personality was the solo founder. Hey, I can invest with a celebrity. Now, his takeaways? I forgot to tell you that he's bad with numbers. That's one of the quotes that comes out of the interview of what he later heard about the guy he was investing in. Suresh signed up and introduced many friends. Hard drinking and smoking solo founder was a walking key man risk. That's what he ended up into. The founder's excessive spending should have mattered. But he was investing in this story. He liked it. So he kept investing and kept staying in it. But he started to realize that the founder was someone who was spending a lot of money. He realized that the business was on thin ice after years without progress. A cashed up competitor came in and took over the whole idea, and he lost his money. My takeaways from this? Well, my model to assess startups is TIEM. Trust. Do I trust the founders? If not, stop. Idea. Is it a good idea? If not, stop. Execution. Let's say there's good trust. It's a good idea. Can they execute? If not, stop. Money. If there's no money, you won't get there. If you're the only provider of money, that's also a problem. So stop. I would apply those. My other takeaways was this company really broke down at the point of execution. Ideas were good. It wasn't a bad idea. And the celebrity status could have really worked. Financial professionals can be overconfident about their investments. Oh, yeah. And investing in startups is always a high-risk activity. So what was Suresh's actionable advice? Search carefully into the character of founders or entrepreneurs. Be even more wary of solo or sole founders. Now, what follows is my worst investment ever. 6 main categories of mistakes that I've learned from my show. And this particular one was a failure to properly assess and manage risk. That's number 2. And my catch-all, number 6, invested in a startup company. That is a high-risk thing. So subscribe and never miss a show. Just check the link in the descriptions below to listen to the full story of my discussion with Suresh, and I'll see you there.